lot in our culture or our business environment is grow, and don't worry about the cost. You can outgrow those type of problems, as long as you show growth. But the vast majority of businesses cannot get away with that.
We've talked about it many times, a bunch of contractors talking about what their goals are. It's sales. Tell me about your company. Oh, we did $5 million last year. Did you make any money? It's concentrating on the wrong things.
So what are the signs that you should start looking at your costs a little bit closer?
There's a lot of different triggers that kind of give you a sense you have a problem. Most importantly, you're just not getting the results that you want.
Expert advice, practical tips, real life stories. Have less stress, more time, and more money in your business. Welcome to the Cash Flow Contractor.
Martin, it's been a while. I don't know where I've been, where you've been, but I haven't seen you in a couple of weeks, I feel like.
I've been several places, but most recently to Las Vegas. Diane's aunt is 87 years old and shows horses, and they had the National Paint Horse Show in Las Vegas, and she showed in 2 categories and won them both. National
Were they like
freaking champion.
The 80 to 90 category? Or
no,
what was the...
No. Matter of fact, I've got a picture of the youngest competitors, like 9 years old, about up to my belts, and Bonnie's 87. So
That's
anyway,
wild.
But
yeah,
more importantly, I was still out there when OU played Tennessee, and I happened to be in Caesars where they have a sports bet place.
Yeah.
I've never been there, never been on sports, but I walked over and go, give me $100 on the money line on OU.
I know, and you got it.
And I didn't watch any of the game because we're doing this and we're doing that. We go to a show. I keep pulling out my phone and,
Degenerate gambler over here.
I was showing Diane, I said, man, we might win this sucker. 2 minutes left and we were up by 9, and then we were up by 3, and then they had the ball and we're moving, and then we're up by 9 again. I go, what the hell's going on?
I'm going to find a segue for us. So
there you go.
It was a big deal this weekend, not just for OU football, but for all college football, because YouTube TV and Disney are on some negotiation battles on, and YouTube TV doesn't want to have to increase prices. They want to cut some costs, or hold on, let me rephrase that. Most households don't want to add another subscription. They're trying to manage their costs, and they try to cut those costs from their, they cut the cord with cable 5 years ago, and they did it because they were cutting costs and they want to, save that money. Today, we're talking about managing costs. And so, Duane, it's a pleasure to have you on the episode. Thanks for sitting through our banter. And welcome to the show.
Well, thank you for including me.
Yeah. You're the author of Operationally Svelte. Tell us a little bit about Svelte. How did you come up with that title?
Well, the natural instinct would have been to do something about lean or something that really indicated cost savings. And I looked at the titles for lean and they were just a mile long. And so I really wanted to come up with something that was a little bit unique. And I hope that Svelte wouldn't be too hard of a transition for people to get to, because a lot of people don't recognize that word, Svelte meaning lean and sleek and attractive. And I really think that's part of what makes a company successful. So I went with that title there, but it is something that is not necessarily something you'd search for when you're looking for cost cutting. That's why I put in the subtitle, which is manage costs to increase profit and most importantly, to enhance performance.
Yeah, and it's such an important aspect of a business. It matters in people's lifestyles. You see that a lot as well, but even more so, I think, in a business, because it's easier to hide behind things and justify things, in my opinion, than on the personal. Like, why do you need the $9 latte? So I think for most people with this topic, they're thinking about growing their business, getting more profit, and they turn to marketing, they turn to sales. But we're kind of going the other direction with can you be more lean? How can you be more effective with less? Yes. And reduce your costs? So maybe tell us a little bit about the typical company that you walk into when they've hired you. What's going wrong?
Well, usually they call me in for a particular circumstance. They know something's not working out, and sometimes it's on a large scale where they're just not getting the economics they're looking for, whether they're trying to become more profitable or not. Maybe they're not even profitable at that point. or other times it's something much smaller where they know they have an area of concern and they call me in and want me to take a look at that area. And I'm happy to do either. And I find usually when I look at one area, they quickly expand my scope to look at other areas because they realize there's a methodology and a philosophy to the approach. And so I can be called in for either, but I usually end up with a full scan of the company.
Yeah. So I want to dive into what you kind of talk about in your book and really what our audience can learn about cost cutting. You come in for a variety of reasons. Someone doesn't know if they're profitable, or someone is not profitable, they know it, or they're having a problem in a certain department or whatever it is. Why does this happen? What's like the starting point? Why do costs become an issue in the first place?
Yeah, so it usually starts when companies are two things. Either they're very young and they just weren't managed and they grew, and so the problems grew with them and they became bigger problems. Or, another big catalyst is like a big capital infusion. I've seen companies that do IPOs or do a big capital raise or something like that where they're flush with cash and they've never been in that circumstance before, and they just start throwing money at their different initiatives, and they're not careful how they do that, and they end up building bloated infrastructures and silos and other things that kind of haunt them later.
We went through that. I think all small businesses went to that in some degree. We had the EIDL loans, we had the ERTC, payroll reimbursement stuff, we had the PPP, and there was just so much cash influx. On top of, in the construction industry, while all that cash was coming in, business was booming. People were doing remodeling projects. People were building. Interest rates were low. So I know that there are a lot of people listening right now that are like, yeah, we did have that cash infusion and things were doing really well and things have slowed down a little bit. And I wish I would have controlled my costs, and I wish I would have put money into that new service line or that new department that didn't work out or whatever it was. So what are the signs, that you should maybe like start looking at your costs a little bit closer? I know probably the better thought is, well, you should just always know what your costs are. But right. What are some of the signs that you need to get this under wraps?
I think that's an excellent question, because a lot in, I don't know, you call it our culture or our business environment, is grow, and don't worry about the cost. You can outgrow those type of problems. As long as you show growth, the market will love you and will reward you with whatever cash you need. And there's been certain circumstances where, like an Amazon that didn't turn profit for a decade, and so they were able to kind of accomplish that. But the vast majority of businesses cannot get away with that. And the tides change, where just a few years ago, we were in a circumstance where the lending and the cash flow market was very robust. And then all of a sudden that changed rapidly. And the companies are caught when they think they're going to have this endless access to capital. And sure enough, they're not necessarily able to do that. So I think there's, from that aspect, it just starts to, what happens is when they do get that capital, they invest it, but they don't necessarily know how to, or they haven't had a lot of experience with that, and they don't monitor return on investment in those circumstances. And so they're just throwing the money in there without specific guidelines on what are we trying to get out of this, what is success to us, and as a result, do they monitor and do they get that? Do we spend it correctly? How are we going to do better at that type of thing? And they may be looking at aspects where they're not getting what they want out of projects, or they just look around at their competition who are more profitable, that are nipping at their heels. They've been in business for a long time and they're not getting return on that investment. So there's a lot of different triggers that kind of give you a sense you have a problem. But most importantly, you're just not getting the results that you want from an organization that you're spending a lot of money and effort on.
Yeah. Martin, I would love to get your perspective whenever you are working with you. One of the first things you do is you say, hey, I need to see your books and we need to get your books clean, because most of them don't even have good books. What are some of the things that you see lead to the causes of, like, hey, we're gonna have to reduce our costs? Like, what are the problems that you identify?
Having lived through specifically what you talked about, I had a $7 million influx into a startup company, and I was the CEO. So I can't really blame anybody else, but we got stupid. I mean, Oh, no, we'd always been talking about hiring these professionals. Anyway, we went and did those things instead of calming down, putting that bank away and paying attention. So that's one of them. Obviously the most common thing is cash flow issues, where people are just really struggling and they don't know why. As ideas to places to start looking to. And one thing I think you talk about in your book is employees are financially illiterate, pretty much. What you do about that will be an interesting subject, but that means that typically I'm the one who spots these things and what we might do about them. They're the ones who just notice I got pain.
Yeah.
Right.
Yeah.
And so, to answer your question, that's where most of it comes from, cash flow.
Okay. So it comes from cash flow, meaning they aren't cash flow positive.
Yeah,
and
cash flow
they get a cash influx, which hides the fact that they're not cash flow positive. Is that essentially what you're saying?
Yeah, and we've talked about it many times, and Duane alluded to it. Their concentration is on sales. A gate cut of a bunch of contractors talking about what their goals are. It's sales. What's your plan? Tell me about your company. Oh, we did $5 million last year. Did you make any money? I don't know. Literally they say, I don't know. So it's concentrating on the wrong things.
Yeah. Anything you want to add to that, Duane?
Well, only that people tend to justify why they didn't make any money this year. So they had that $5-10 million revenue this year, and they say, gosh, well, we just had one or two things that happened that next year won't happen, and so we'll be profitable next year. But the truth is, there's always things that come up in an organization that will steal your cash flow. And so you have to have this. You have to have a plan that you are cash flow despite unexpected expenses. You have to anticipate those.
Yeah. Okay. Well, I know that you talk a little bit about like how culture, and you've even referenced it, how culture really has an impact on this. Can you go more into that about like what does that look like in terms of culture impacting cost cutting?
And Martin, it's funny because I don't think I used that, say they're financially illiterate, but I certainly meant it. I sugarcoated it a little bit there.
I don't. It's in those words.
It is true.
In the intro to my book. Says you can't survive as a financial illiterate.
Yeah. And I think that's a huge part of the problem, where I always joke that you have to be careful that you ask your employees to spend money like it's their own. Well, you better be careful what you wish for, because if they do that, it's not necessarily a good thing.
They don't do it well.
Yeah.
Right.
And so I think from a culture standpoint, I do think that's changeable and correctable, where a lot of the reasons employees are financially illiterate is that no one's asked them or trained them to be otherwise. And I think if you go ahead and you do train employees essentially to understand what cash impact it does, what they're supposed to be doing, even give them personal finance type instruction, they start to learn to do better kind of in that effort. And I also in order to kind of reinforce that culture, you should recognize employees and their in their efforts to reduce costs. So just like sales, if someone makes a big sales on the next company meeting, they are highlighted and praised. Well, you know what? If someone does a great cost savings initiative, they should be highlighted and praised and perhaps even financially rewarded for that. And the whole company should hear about it so that they learn that that's an expectation and something that you get rewarded and paid back for. And I think those things, you do a few of those type of things, and it helps to instill something that lasts, it changes the culture.
This was something I was going to bring up with you, this idea of financial not skilled at financials. I won't say financially illiterate.
Well, I'm fine with it.
And it's not that hard to become literate either.
I agree.
You get into in these weird things that can come about in high finance, but to be functionally literate in books and finance is really pretty easy. Mm-hmm. But what we find with small companies is if you want people to understand what the score is, and they're responsible for the score, they need to know how to read the information. And many companies, especially small, if you're in public, you can get it on the internet, but these small companies they're really reluctant to show the true numbers to their people. And I'm split on that. There are some companies I've worked with, I don't want guys to know.
Right.
There are others that go, yeah, no, they're responsible for it. You need to tell them what they're responsible for.
Yep. And budget
So
down to that
what's
level even.
Well, what's your approach on that? What's your opinion of the employees need to know, the details, margins and sales and profit?
Not only know the details, I think they need to be accountable for the details. They need to be part of and that starts with the part of the budgeting process. And as you probably read, I'm not huge in the saying budgets are a sign necessarily of efficient cost controls. Just because you're on budget does not mean you're managing costs well. And but that's a little bit of different subject. But I do think it makes a lot of sense to drive budgets all the way down to the lowest level you can in order to try to build awareness and accountability. And when people miss from that, it's not, we don't have to go back to the old days when I first started work. If you could be terminated for, just about anything. And I'm not trying to suggest that you start terminating people for missing budgets, but I am talking about making people accountable and aware of what's happening, and rewarding people that manage those budgets well. So I do think that I totally agree with you about pushing it down.
Your comment about budgets not being, you're not 100% budgets are the miracle. It reminds me of, I think Eisenhower said, but plans are worthless. Planning is invaluable.
Yes.
And
exactly.
budgeting at least makes you become aware. Well, I didn't know we did that. Well, who's that? I totally get it on that.
That's a great quote.
Quick ad break to tell you a little bit about OpenPhone. If you're a contractor that has a single cell phone, you're probably inundated with text messages and phone calls, oftentimes that you can't be responsive to or that you can't answer at all. So what's the solution? You can buy another office line with Verizon or AT&T, and you can have an iPhone that is passed around from employee to employee, depending on who's on call. But what if there's a better way? What if there's a way that you can have all your phone calls recorded to go back and listen to later, transcribed with summaries so that you can get a quick glance at what happened during the phone call, and even connect it to your CRM where all your other customer information is? OpenPhone is the perfect solution because it does just that. You're able to add all the users you need to for whoever needs to have access to the lines for your company phone. And then you can also find all of the information you need at a glance with a centralized location for all phone calls and text messages with your customers. Whether it's for marketing, for sales, or for service, OpenPhone is the perfect solution for you and your team. If you're interested, we have an offer down the show notes from OpenPhone. Please click the link down the show notes, or you can see it here on your screen to be able to find more information about OpenPhone. Thanks for listening. Back to the episode.
One thing I find pretty commonly, or common in conversations with people, all kinds of people, is if they got a budget for something, they need to spend it all. And I think one of the voodoo is that if I don't spend it, they'll cut me next. It doesn't matter. My dad was a very efficient manufacturer, and he had a rule that if you got a budget and you spent it needlessly just to spend it, he would kill you.
Wow.
That was a little bit of an overstatement. He never killed anybody.
Right.
But that would send him through the roof. You have to have a reason for it. And just in passing, Duane, we had a guest on named Todd Hagopian, and he is a turnaround guy and has worked for Berkshire Hathaway and Illinois Tools. Anyway, a bunch of guys. He has a method that I'm just would find fascinating. And so I'm just referring you and our listeners who are interested in what we're talking about today. Let's go back and listen to Todd.
Is he? I think I did listen to that. He's the gentleman that had the bipolar and took the medication and realized that had taken something away from his. I thought it was a fascinating podcast. I do encourage people to listen.
And
to
his method is so awesome, but it kind of work. You need some help. You need some people to help you put it together and track all that information.
Right.
Yeah.
Right.
Well, speaking of method, Duane, get into more of your methodology. Like you come in, where do you start to look? What is this? Kind of walk us through your methodology.
So the first thing I do is I always look at where they're spending their money. So I don't give me a P&L, give me a disbursements journal. Where is the actual cash going out the door? And that tells me a lot. I also try to look at larger contracts about what is our larger obligations and where cash has to go in the future, and making sure understanding where are we locked in or do we need to renegotiate. But I start with the larger expenditures and work my way down and try to say what is the biggest opportunities to do something here. Because if you can make the big differences early, everyone gets on board because people start realizing, wow, this approach really works. We're actually making a difference, and before you know it, you have a lot of allies in the effort.
Do you have an example of where you found, $1 million item or whatever's a big item, and then mined into it and got some significant results?
Yes, one of the bigger ones is kind of cloud computing right now, pops into my mind because it's such a hot area. And it used to be that the whole cloud computing and storage was really small probably 20 years ago, where Amazon just came out with their cloud services, but everyone was a big fan. Well, it has grown to be like a major cost to most companies now. And because rather than have your own servers and storage, you now just go to these cloud services and get theirs. And what I ran into, and this was with a company that they really, they would spin up the different instances and everybody would want their own. So you would have circumstances where someone would want their storage and their computing power, and they really wouldn't want anyone else to be able to touch it because they felt it was their department for their function. And you had a ton of different cloud type of services that were set up. They weren't being utilized. They were yes, within budget. People had budgeted for them, but the utilization was terrible. And in many cases, they wouldn't turn them off. They even had owners that had left the company. And so they really just weren't managing and controlling that cost very well. And it was just end up being a no-brainer where you could turn these things off, or you consolidated efforts to try to use the same instance in storage, and found ways to divide and manage that in governance, and be able to save 30-40% of the cost on those type of things. So there's a lot of examples where people just haven't drilled down on what they've been doing so long because it's inertia. They've been doing it for 10, 20 years, and no one's really said, hey, we got to challenge how we're doing things here.
Yeah. Okay. So, and then what happens from there? So you've looked at where cash is going. You understand what obligations you have with cash. Yep. How do you move forward?
So I first go to the owners and I say, well, let's talk about how this is being spent, how you're governing this. And it doesn't usually take that long to realize if there's an issue there, where if they're not managing it well, I almost always know I have an opportunity. So if I talk about their governance, how they're controlling the particular cost that's going, and that type of how they're approving it, and they can't give me good answers, I think I usually know I have a winner, and I just slowly approach a different method in order to try to figure out how big the problem is, how we're going to approach this. And I try to work with the owner because I don't want to ostracize that individual. I want to make them part of the solution so that they can help me declare victory and they can be part of the win. And then because of that, they become an ally and willing to support me and help me. And before long, we're able to come up with a solution that saves the company some good money.
So you literally would, in the server or the cloud serving server example, you would ask the person,
yes,
what are your governing controls, your left and right
yes.
boundaries? How do you compare costs? How do you audit who's using it?
Yep.
And they typically look at you and embarrassed and say, well,
keep it, yes, but I would say that I think there's a few more steps in between. What would generally happen is I go there and of course, I don't have access to those systems. They don't want me, so I asked them, I said, well, give me these reports. Show me the utilization level, the instances that you bought, their activity level. And there's usually almost all the applications have a system that provides you these reports. So what is going to show you whether they're being utilized properly? And and how do you, as a manager, review those? And once you're talking to those people, they say, well, here's those reports. It is low, but this is why. And when you start drilling down to this is why, it's because, and you start realizing those aren't really great reasons. And they haven't really examined it. When's the last time you ran a report to show no activity per instance? And they, well, we haven't really run those. We haven't really done that. Well, hey, why don't we just take a quick look at it, see what it shows? And sure enough, it shows, the no utilization in 10% of the instances for the last 6 months. And then Now, do I run off and go to their manager and say, look what this idiot did? Not at all. I say, look, I work with them and say, that's fantastic. And I let them report it up that I think we have an opportunity here. And from there we found an easy win. Well, let's look at the other aspects of governance. Why can't people share instances? Why do they each one of them have to have their own dedicated aspect of it? What is your process for turning things down and off and as they're no longer needed? So we go through a different rounds of iterations till we get to the right answer.
Yeah. No, I think that's a really good point that you make, is that a lot of times whenever you're doing cost cutting, there's a sense of shame or regret, like, oh, we made a mistake. And what you're reframing it is like, whoa, we found an opportunity. Like,
that's right.
This is a great thing.
Yes.
And I think that's really important, not just with these like with costs, but with any type of mistake. If you can treat it as a lesson, if you can treat it as a win, that, hey, we made this mistake, but it's not going to happen again. And isn't that awesome? Then you get people willing to come forward about other mistakes, or other things that, oh, well, he's getting celebrated for cutting this cost. I know 5 other things that we could cut costs on. And then it kind of comes out, and that's how you create that culture, right? Yeah.
And I don't want to take away from their responsibility to manage the costs that they're supervising. They absolutely should have known all that information before I walked in the door.
Sure.
But in many cases, they're working on a lot of different initiatives. They're under a lot of pressure. They're understaffed, and so they almost didn't have a chance to really look at something this way. They had too many other priorities, and that's one of my reasons I promote in my book, the Cost Management Center, is because you need somebody who's dedicated to helping them for those type of things, because otherwise the saving money becomes a sideshow. It's part of low on their priorities because they've got a million other priorities that people are breathing down their neck about.
Yeah.
Well, you mentioned the Cost Management Center. It is a prominent part. What is it?
So Cost Management Center, and there's different scales of this. So we'll talk about what it's like in a small business and then how it evolves to what it becomes eventually. So in a smaller business, this is just a group of people that are responsible for managing the costs of the company. It can be, and it's all aspects of costs. It's everything from what you spend on vendors to real estate to how you're handling compensation and wage increases and those type of things. And they come together and they hold each other accountable. In many cases, in an early stage company, it's 1 or 3 individuals at part-time jobs of those individuals that come together. They have a meeting to say, how are we focused on controlling those costs? And so they're just making sure that it's a priority that's being discussed and being approached appropriately. Then as the company grows, you start having people that are dedicated to cost management type of roles. You have people in sourcing and procurement. You have people that do just building, leasing, and people that do nothing but compensation. And those type of people now become part of the cost center, and that is their dedicated responsibilities. And so, but you still are left with that group of people that really own everything below the revenue line. And they're responsible for trying to make sure that the company is doing its best to control costs below that revenue line.
Okay. So what would that look like in a small business? Who would be the best person for that? Who would be the person that's going to spearhead it and own it? Is it the owner?
Well, I think it depends on the owner type, right? So sometimes you have owners that are strictly visionary salespeople that and they really don't want to, and you better not get them caught up in the administrative aspect of the business. That's not where they're going to shine. It's not good for the business. And so I would say in most cases, no. Now I have certainly run into owners before that because it's their own money, they're very involved in how it's being spent and manage that very closely. And so in those circumstances, I would say yes. But it's usually people who is in charge of things like the finance would probably be early stage member of the cost management team. Your HR, whoever's handling your payroll and compensation and those type of things would be early stage involved in the cost management center. And those people, because it's not a full-time role yet for those individuals, the accountant's still putting out the monthly reports and still doing all whatever filings they need to do and that type of thing. It's not a dedicated responsibility, but it's part of their role. And you have those meetings because you emphasize that it's an important part of their role. It's not, don't let it be a sideshow.
Is this something that you could outsource? Or
You know,
what do you think?
you can. In fact, that's how I've made my living. In many ways, in that aspect of it. And one of the reasons I wrote the book, and one of the reasons I'm doing podcasts and everything at this aspect, is that I'm trying to advocate for teaching them to fish rather than giving them the company to fish. In the sense that there's so many times when the moment I walk out that door, all the efforts I've done start to unwind, and I can go back into that company 3 years later and start it all over again, because the lessons never took. They never had a group inside that does this themselves. And this was very obvious because I ran into a couple of times where I'd be part of a team a company was bordering on bankruptcy. And so they hired a team of people to come in there in order to try to see if they could salvage the company before having to go through bankruptcy. And really what they did is they formed a cost management center team. It was an external team of people like myself that essentially represented a cost management team. And I'm trying to advocate for companies to essentially manage that themselves, to have that themselves.
Yeah.
This makes me think, if it drops off over time, what is an incentive? How do you incentivize the cost management team? And what perpetuates that? I mean, if it drops off, the incentive must have gone away or the person, whatever. How do you deal with incentivizing people to do things, without running roughshod over the rest of the organization?
Yeah. So I actually have a very robust savings tracker that I make. Cost Management Center has. It's almost like a sales revenue, but reciprocal of that, where you calculate for every transaction you do or every function what your expected savings is. What would be par? You have to always have what is the measurement, and is it in compensation? Maybe it's last year plus CPI or some measurement that shows this is what pay raises should normally go up. And how do you do against that at the end? For a vendor, it can be what we paid for it before, and it can be CPI adjusted. Sometimes those get complicated because you're not buying the same thing every year, and so it gets a little bit more challenging, a little more difficult. But I think I have a very good track record of managing the cost savings tracker, and I get someone within the company to audit it. So I have like internal audit goes through and they review my savings tracker every quarter, and they usually take the high dollar savings and they get a high percentage coverage, and they validate my savings so that they are real to management.
Wow.
And do you then give a percentage of that to the people as a
bonuses?
As a bonus? Yeah,
but
bonuses,
usually
not,
it's so big that you don't dare give. Like if you gave 10%, that would be the highest paid people in the company. It's because it's particularly at the beginning because it's such a target rich environment.
so easy. Yeah.
You're right.
Yeah.
But I advocate for bonuses that are tied to that cost savings result.
Which is interesting, just in passing, but they get it for the improvement,
Yes.
which means that there's no end to improvement.
Yeah. And you keep
They can't
thinking,
hit a wall and say, you can't get any better. Got to go find another job.
and it's funny. I almost warn companies that it's like an athlete, though. Eventually, you're going to get the fat off the athlete, and they're lean, and you're not going to have as much savings per year. Sure. And as a result of that, really what you're paying your cost management team to do is keep the athlete efficient. But it's interesting that we produce results every year. I rarely come to a situation where I have to go use that as an explanation, because it's amazing how opportunities keep coming up, and those opportunities have not ended.
Yeah. Like most things, what we're really dealing with is behavior change. And I'm thinking about our audience, and they are the cost control center. They're the owner. They're the ones that have got themselves in this mess, or it's not even necessarily always a mess. It's just that there's a lot of improvement to be done, and it revolves around behavior change, in one way or another, in my opinion. And so essentially what you're doing is you're also putting in some rules in place for how to spend cash. Right. What are some of those rules? What are some of the things that our listeners can start to implement? Little things, basically kind of creating red tape for themselves because they have free reign over the finances as the owner in their small business. What are some of those those little things that they can start to do, like, hey, before buying that software, do this, 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 and then if you can say yes, 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 then you can buy.
Well, if it's okay, let's maybe start big picture and work our way down to the little things, because I think there's some big things that owners mistakes they often make that I think we probably can give some advice on that are actually not only just cost reduction issues and create bloat, but they are actually help a lot of other aspects of the business. And one of the biggest mistakes I've seen is that a lot of entrepreneurs, because they are visionaries themselves, and that they tend to be attracted to other visionaries. And as they grow, they hire visionaries, and you end up with not a lot of doers, not a lot of people that actually get the work done that needs to get done. And so I think I caution entrepreneurs to hire people that are different from themselves, that fill gaps within the organization, so that, and it's true for cost and bloat and waste, but it's also very true for many other aspects of the business. You want diversity of thought and skill set.
Yeah. Okay. So hiring people that are doers, that are going to get things done, that aren't visionaries and just going to fill a management role, that then you need to hire someone to actually do the work.
Yes.
Okay. So what else? What are some other things?
Different from yourself. I mean, a lot of entrepreneurs, they aren't comfortable with no. Some are very comfortable with it. Some are too comfortable with it. But a lot of them are, just want to be nice, and they're when they first get their first employees, they don't want to be too tough on them. Learn to be able to say no, that you can't appease everybody, and that no is something that is going to help the organization learn that it's yes to what is important, and no to things that we as an organization can't afford yet, or don't feel that it's going to build the value that we think it's going to be. One of the companies I worked with, they had one of their mottos was getting to yes. Everything was getting to yes. And it was like to try to say that you should always try to move forward with everything. But the truth is, some ideas and some strategies aren't necessarily worth moving forward. And part of being a manager is going through there and realizing which are going to positively help the company and which are going to distract the company or just not have a good return on investment.
Yeah.
That would be another one.
No, that's really good.
You talked about following the cash first. Mm-hmm. And I'm going to have a question at the end of the day, because no company I know has a cash disbursement. And how can they create that?
Yeah.
Maybe we can talk about that real quickly right now.
Sure.
Using bank statements, a guy can get pretty close.
Yes. Fortunately, rarely do I have to go down and start pulling bank statements. I will if I need to. Usually, somewhere along the line, they had to put into a system of some kind. Sometimes it's just for tax purposes. Other times it's for other types of financial reporting. But if they're producing a P&L, then usually I can back into how they're actually spending their money, because that type of thing. But if I need to, yes, I can go back to bank statements.
Yeah, you can stick them in chat nowadays and say total up the expenditures.
Yeah. Yes, right.
Now, categorizing them would be a little bit different.
That's right.
So you talked about following the cash first as first step, gives you a good idea of where the money's going.
Yeah.
As opposed to a P&L, which may or may not give you a good idea, because it could have lots of things in there that are income that aren't money, right? Then you talked about utilization.
Yeah.
And mostly we're talking about utilization that's spinning disks in the cloud. Mm-hmm. But that applies to everything.
It does.
Everything.
That's right.
Including people who aren't doing anything.
That's right. It's headcount. It's having accountability for tracking what your staff are doing. If they're not being properly utilized, then it's not good for them either.
Yeah,
well,
that's what we talked about. We talked about before, Martin, is whenever you lose someone, don't refill the role. Like, see how far you can go.
Who was that you, or was that a guest? You just
we had a guest that we're talking about.
That was Todd Agopian again.
It might have been Todd. I think it happened with somebody else too, but so quickly we lose someone and we think that we need to refill that role with another person. But hey, how long can you make it without that person? Yeah. And maybe it's a good time for a reorg. Todd was all about the reorgs.
Yeah.
So anyways, yeah.
And sometimes it gives the underlying staff the challenge and the opportunity to step up. And they're dying for that opportunity. And so so you actually are, it's rewarding to them, even though they have a little bit more work, they're excited about it.
Yeah. Yeah, for sure.
I think you also talked in the book about signature authority.
Yes.
Can you...
yeah, that's a great one.
I've got clients that have guys running around that buy millions of dollars of stuff on their own, anyway, signature authority.
Right. You just the one
What
of
does
the
that
key
mean?
aspect of that. The key aspect of that, it means that only certain people in the company, and maybe in an early stage company because it's with an owner, only the owner can sign contracts. Anything that obligates the company. That there's very few people, if not one, that can actually sign to obligate the company and disperse cash for. And that's very important because otherwise there can be circumstances where other people are doing deals outside of your purview that you're not quite sure you understand, and you don't even know about them until you get a bill. And then you all of a sudden, it's the first time you realize that there's been a contract or an obligation that the company has entered into. And so it's important that very few people have that signature authority, and that's your control to make sure that the process is followed. Is there a process being followed? Do we need this product or service? Is the money being spent something that is the right priority for the company? And it gets stopped by the person who's supposed to do the signature to make sure those questions have been answered before something is signed.
Hey, if you had to throw out a number just for fun, you've been around a lot. What percent of expenditures in United States companies are going to waste?
I would throw in the 10 to 20% that are pretty, that I would put in the low hanging fruit category, where they 10 to 20% that really wouldn't hurt the company to or change how the company is operating to implement.
Is that including labor?
Yes.
Wow.
Yeah.
I think it's much higher if you include labor, especially with some of the automation and AI that's introduced. I mean, there are entire departments that could probably be removed from some companies.
Yeah. And I would say that's the pain-free level. Because I get called in, some companies, they want the savings without much. They don't want to really disrupt or ruffle any feathers, and so usually that's a 10 to 20%. You're absolutely right. If you can start looking at things like outsourcing major departments, or even trying to eliminate them that aren't producing the results, you can go much higher than that.
Wow.
Yeah. Most companies, I find,
crazy.
unless they're in pretty dire financial situations, though, really it's hard to get them to make those major decisions to that then take a lot of investment, because sometimes those are 2 or 3 year solutions.
Yeah.
When you talk about outsourcing a function or automating a function, you have to really convince them that this is something that they are willing to take on for a long term. And sometimes there's an upfront investment in that effort.
Yeah. I think another thing that we haven't mentioned here, but is maybe obvious to some, but is very important. You said 10 to 20%. That 10 to 20% goes to the bottom line.
That's right.
And
Triples their net profit.
Oh, more than
Actually, public companies are in 3% range. The guys we deal with, 7% is a real average.
Well, but if they save 20% of their expenses, that would be more than 7%. That their net profit would probably 4 or 5x.
Yeah, whatever that number is.
Right.
It would be a number compared to their profit.
And so that's something to think about. Like, whenever people think about cutting costs and all that stuff, oh, okay, but no, just every dollar that you save is a dollar that you just keep. Obviously you got taxes and stuff, but something to think about.
And that goes to where companies focus on sales, and unlike sales, for every dollar of sales, you may be able to pocket 10 cents of that, right?
Yeah. Our point on the sales is, how do you get sales? Discount. Discount 7%, you gave away your entire net margin.
Yep.
So you're getting the privilege of working. You're getting the privilege of the experience.
I'm just happy to be here, guys.
Yeah.
Man, no, this is really fascinating. Okay, so your book is out. We're gonna go ahead, Artmore.
Well, there was one phrase you used in there that I think warrants. You used it several places. One throat to choke. What's that mean?
So that's really a reference to the cost management center, is why you have a cost management center. So if something's not going right, you have one throat to choke over there, and you go to them and you say, it's your responsibility to fix X, Y, and Z, because we're not having cash flow positive. We're not where we want to be on these type of things. For whatever reason that there's a cost issue, you have one throat to choke on that, in that responsibility. So I encourage that, because otherwise one of my issues is that the cost management functions currently are dispersed throughout an organization. So you have HR managing some of the payroll stuff and some of the compensation stuff. You have some people within that are managing the office space and leasing. They're over in a different group that's managing that. You have sourcing and procurement that's in a different department. And so it's so dispersed that you don't have that one throat to choke, and you really want to consolidate that effort in order to kind of get that.
Right.
Yeah, man, one throat to choke. I like that. I mean, it's almost like it's almost like the one source of truth. It's no different than some of the, scaling up or Rockefeller habits or EOS. Like who's the owner of the rock? Who's the person that we're going to point the finger at who's accountable. So it's a really, really good thing. Okay. Your book's on Amazon, Barnes and Noble. We'll link to it in the show notes.
Thank you so much.
Thank you for going over it with us. Is there anything else that you want our audience to know?
No, I appreciate the opportunity there. My website, if anyone's interested, is efficacygroup.com, EFFICACY group.com. On there, you can read about the book, and also there's I do offer free consultation, advisory type of meetings in order just to try to help people. I do a lot of that, and I enjoy it.
That's wonderful. And you also have a podcast. We should promote that.
Well, yes, it's released next week, so you're going to be ahead. Maybe by the time this gets released, it'll be up.
Okay,
it's appropriately called the Cost Management Center.
A Cost Management
Center.
There you go.
There you go. Yeah, right. No hide in that.
It.
Better name than the Svelte, probably. But
yeah, I love it. Cool. Well, Duane, thank you so much for sharing your knowledge, your methodology, everything about running a lean operation or an operationally svelte company, and talking about the Cost Management Center. It's been a pleasure getting to meet you, and glad to introduce you to our audience. So thanks for coming on.
Very much enjoyed the conversation. Thank you.
Okay, thanks. You made it to the end of the episode, but before you go, if you found yourself thinking about growing your construction business while listening today, I want to share something with you. It's called our 24 Things to Hiring and Training the Perfect Executive Assistant for Your Construction Business. And it's a free guide that we've created. It's not theory. It's what we actually use to help contractors hire the perfect executive assistant. And really, we help you find ways to delegate over 50% of your current workload and get back 20 hours of your time every single week. You didn't start your construction business to just be doing admin work, to be buried in paperwork and endless admin tasks. This is the guide that shows you exactly how to find and train someone who can actually take all that weight off of your shoulders. So this is a real actionable, great PDF that has templates and processes. It's really, really great. And I want you to check it out, even just to get your feedback and how we can make it even more valuable. But I know that you're going to love it. The link is in the show notes. Please download it. We'd love to see how much of an impact it makes on you and your business. Thanks for listening to the full episode. Check out the guide. It's free. No reason to hesitate. No reason to wait. Download it now. And before you go, I just want to ask for your gracious subscription to our podcast. So if you have 2 seconds, it means the world to us. Just subscribe on YouTube, Spotify, Apple, or if you'd like our weekly newsletter delivered to your inbox whenever we release an episode, please subscribe in the show notes. Every week, we're talking about real strategies on how you can grow and build a profitable construction business that runs without you, so you can have less stress, more time, and more money. Click subscribe wherever you listen to the show, and thank you again for checking out The Cashflow Contractor. See you on the next episode.